Today we're going to be talking about market profiles. What is market profile? It is a detailed analysis of market dynamics and looking at the market with a dynamic, mechanical, and objective perspective. There are two ways to look at the market based on market profile. The first is the simpler version, and the last is the advanced version. So going lower, here is some illustrations. On the simpler version, which contains two profiles, is the consolidation, range, and expansion. That's range and expansion. And it is the most basic way on looking at the market. Range and expansion. Going lower. Your job as a trader is to take part only on the expansion profile and avoid consolidation or ranging profile. This acts as a huge filter to avoid low probability trading condition like the ranging profile, which I just illustrated over here. Okay. And also this. So let's continue. So we are to avoid trading the ranging profile and focus on the expansion profile. Avoid this, focus on this, avoid this, focus on this, avoid this, focus on this, avoid this, and focus on this. So let's proceed lower. And the advanced version, which contains profiles like the ranging, expansion, retracement, and reversal. This is what the advanced profile actually looks like. Range, expansion, retracement, and continuation. Range, expansion, and reversal. This is how the advanced profile looks like on the chart. So the most advanced profile of market profile is actually the manipulation profile, which you got your range and your manipulation, then your expansion. Range, manipulation, expansion. So let's continue. So here are some possible outcomes. First, let's start with the range. From here, from the ranging profile, you might have an expansion or a manipulation. Then from your expansion profile, you might have a retracement, a reversal, or a ranging profile. Then during your retracement profile, you might have your expansion and your ranging profile. During manipulation, that's after manipulation, you might have your expansion. Something like this: range, manipulation, expansion. Moving forward, after your reversal, you might have a retracement. So this is how you integrate this whole diagram on the market. So study this and let's proceed lower. The market profile rules. Only trade expansion and reversals. You don't want to be trading this kind of market condition, or you're going to lose a lot. When bullish, wait for a pop below an old low, and you can position yourself for longs over here and trade your expansion. When bearish, wait for a pop above an old high, then you can position yourself for longs and trade your reversal profile. So avoid trading the ranging and the manipulation profile and the retracement. So avoid trading the ranging profile and the manipulation profile. Trade the expansion. Don't trade the retracement. Trade after the retracement. Don't trade the retracement like something like this. Let me give you an example. You will be shorting here. Let me say this was another block which was in a discount. Remember, we sell at a premium and we buy at a discount. So this other block was at a discount. So you will be selling here. Oh, this is actually very big. Let me use this. So you'll be selling here. Coming. I need to illustrate this. Okay. So you'll be selling here and you get wrecked over here with this move. So don't trade the retracement profile. Trade the profile after the retracement, which is the expansion. You can position yourself here. This might actually be a move into a lower time frame order block before expanding lower. So avoid trading the retracement profile. Focus on the expansions and the reversal. Don't trade the ranging profile and the manipulation profile as well. So integration with key levels. Here, range manipulation into key level, then expansion lower. Here, ranging into in a key level, then expansion lower into a discount key level, then a reversal. So you can actually use this whole illustration for your own benefit. Study this very carefully. So here, uses of key level. Key levels are actually potential areas for CROT to be formed and also can be used to actually cash all high probability total soups as well. There are also zones for expansion and reversal opportunities, and they can be used as confluence and for your trade ideas. So, and they can be used to actually frame your trade ideas. Important key levels. We got the high and the low, and your order block, your breaker block, your rejection block, and your fair value gap. All these were actually taught on level 1. You can go back and rewatch it if you want to. Level 1, not level 2. Level 1. Okay. Going lower. Key level plus market profile. Using proper rational and sound logic. Each combination of key level and market profile, we have a certain possible outcome, and it acts as an important filter. Avoid certain combination and trade orders. Use key levels as a factor to expect or anticipate market profile. So here we got some ranging profile and key level. You got the first scenario, you got your range, manipulation into your key level, then expansion higher. And your second scenario, you got your range and expansion out higher. So going lower, here is your expansion profile plus your key levels. You got your ranging profile first, expansion lower into our discount key level, then your reversal. If you look at this diagram, study it carefully. Remember, I told you when bullish, don't enter at once. Wait for a dump below an old low before you position yourself for longs for higher prices. That's when you're bullish. So here you can see the turtle soup into the key level here. Then before reversal profile begins. After expansion profile ends, expansion into our key level, we began our reversal profile with a turtle soup. Same thing here on your second scenario. Here, range, expansion, range, manipulation, turtle soup, and expansion for higher prices. So going lower to the third scenario, range, expansion, retracement, maybe into a breaker block or a mitigation block, then expansion lower into our discount key level, turtle soup, reversal profile begins. So moving forward, reversal profile plus key levels, range expansion dips into our discount key level, turtle soup, and reversal, and ends with a ranging profile. Range expansion for scenario 2, turtle soup, reversal, retracement maybe into a mitigation block or a breaker block, then expands higher. So this is how you actually integrate these concepts on the live market. So filters of key level and market profile. Avoid trading the ranging and manipulation and retracement profile. Only trade the expansion and retracement profile. I'm coming. Let me take this off. Avoid this and trade this. Expansion and reversals combined with key level. This is very important. This filters and possible outcome. Last market profile plus key level presence outcome. Expansion profile, no key level, avoid. Just avoid that. Expansion profile plus key level equals reversal. Trade this. Expansion ranging profile plus no key level is actually a manipulation. Just avoid this if you don't want to lose all your money. Ranging profile plus key level equals to expansion. Trade this. Reversal plus no key level equals to retracement. Avoid. Reversal plus key level equals to range. Avoid, or you're going to get stopped out a lot. You can't be trading in this kind of market condition. You're going to lose all your money. So, retracement profile plus key level equals to expansion. You can trade this. Manipulation profile equals to expansion. You can trade this. That's after the manipulation, you can trade the expansion higher. So let's proceed. So here, logical framework, very important. Use higher time frame for finding key levels. Use lower time frame for profiling. Daily key level, 1 hour profiling. Remember time frame alignment. 4 hour key level, 5 minutes market profiling. 1 hour key level, 5 minutes. 4 hour key level, 15-minute market profiling. 1 hour key level, 5 minutes market profiling. 15-minute key level, 1 minute market profiling. So going lower, combining daily range with market profile. Using time frame alignment. Higher time frame, you can use your daily range. Lower time frame, you can use your market profiles. Sorry about that. Uses of daily range can be used as a filter. Let me say, remember, we actually sell at a premium and buy at a discount. Maybe you see a order block which is not actually on a premium. Let me say this kind of order block, you can actually filter this and you say you don't want to trade this, you want to trade off the premium, and maybe when market retraces there, you can take your shots. It can be used as a filter, and it can be used to build a higher time frame narrative. It can be used for targets. Remember, that was actually talked about on our last class. And it can be used to manage risks properly. So daily range plus market profiles. Bullish order flow equals to bullish draw. We haven't actually talked about order flow, but we're going to talk about that soon. Premium key level plus expansion equals to retracement. Discount key level plus expansion equals to reversal. So here are some illustrations. Here, bullish draw plus daily range plus market profile based on time frame alignment. So here we started with an expansion lower, a retracement, then we dumped lower with this move into our equilibrium price and discount region. So you have to trade what? Avoid this expansion move lower. You have to position yourself on this reversal profile, targeting where? Our daily range high. So that's that for this. So you can see this key level was not actually respected. This key level. Why? We don't buy at a premium. We buy at a discount. And remember, I told you the equilibrium of a daily range can also be used as a key level. So avoid trading this expansion. We are here to actually cash the biggest move in the market, not the smaller moves. So you need to position yourself on the reversal profile towards the high of this daily range. So going lower to scenario 2, here our discount key level, our key level was at a discount price. Here market expands lower to the key level, then you can trade your reversal profile, targeting our opposing end of our dealing range. Here, this is what most people actually trade. Key level on the discount region, trade higher, and you can target your daily range high for your drawn liquidity. Going lower to a bearish condition, bearish order flow equals to bearish draw, discount key level plus expansion equals to retracement, premium key level plus expansion equals to reversal. So you can see here, this key level was on the discount of this range. So we are actually looking for sales. So we're not actually going to trade off this key level with this touch because we are not actually in the premium region. So here we avoid this expansion move. We are looking to take more profits off the large moves. So here, when bearish, wait for a pop above an old high. So here is your pop, poop, and dumps. Target where? Our daily range low. It's as simple as ABC. You just need to actually train your eyes. Here is the second scenario, which our key level was actually on the premium region. Here, expansion into key level, turtle soup. Here, and expansion lower to our daily range low. So daily range can be used to actually build narrative, and it can be used to filter good key levels and also draw on liquidity. Like this key level was not actually used by the market to push price lower. It was used to actually trap those who were shorting here blindly without the knowledge of premium and discount daily range levels, and they actually got wrecked with this move higher, and the market dumped. So going lower, an important note for you all. It's mostly used to build narrative. Once you have built a narrative and key levels and the key levels, market profile, and daily range are in sync with each other, you can then start positioning yourself with CRT towards the draw on liquidity. So apart from daily ranges, you can apply the same concept in typical ranges and expansion swings. This is just the price aspect of the market. We are still yet to learn the time aspect and the most important of all, which is actually integrating both of them together in a logical framework. So build your fundamental understanding with this logical framework. Daily ranges makes up at least a quarter of the market movement. You will have to apply the same logical framework to expansion swings and ranges, which will make up the rest of the movements, and must use time frame alignment. So enough yapping of drawings. Let's go to to the live shots. Going higher, 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 higher. I'm gonna drop in notes, don't worry. I'm gonna give you a good detailed notes on this topic. Okay, here we are. So here we are on the charts, and we are on a bullish order flow. Why did I say so? Turtle soup pop below an old low, breaking highs. Turtle soup breaking highs, taking lows and breaking highs. We are on a bullish order flow. So here the market expanded higher, so, and consolidated here, expanded again. So we are waiting for a retracement profile for lower prices. So here, playing this out in time, we got a dump lower with this candle here, taking our fib from the old swing low to the recent swing high. Here we got our daily range, and you can see this is actually the equilibrium here. And if you look to your left, what do you got there? You got your fair value gap here. So here we have dipped into our equilibrium and discount region. So here we swept this low, and remember I actually told you guys on level 1 the market does two things: takes out liquidity and rebalance and imbalance. So here we have actually rebalanced this for our FVG on SAUSD and dipped into our 0.5 equilibrium and discount region, and so we can move to the lower time frame and look for higher prices. So here, expansion, range, expansion, retracement was next. Expansion, we got our key level already. A retracement into a discount key level. Expansion, we can target our daily range high, which is this high over here. So going from the lower time frame, which is the higher time frame, which is the 4-hour, to the 15-minute time frame. Here. Okay, here we are. So we got our turtle soup. Let me take this. This is our key level. We got our turtle soup here. And we got our daily range high, which is our draw on liquidity. Okay, so here we got a retracement into, let me just say, this breakup block. Yeah, got a retracement into this breakup block first, then we got another retracement into this other block, which is actually aligning with our breakup block. So you can actually use, the market actually gave you 2 entry opportunities. This is one, and this is the second one here. Two buying opportunities. You can put your stop here, and for the other block entry, you can put your stop here and target same areas. Almost same arrow, 6 arrow. And so here, let's see how this plays out. And here, your expansion profile for higher prices. There you go. Expansion towards our daily range high, which was actually our draw on liquidity. So you can see how I'm actually combining everything together. So here, this is actually a CRT candle range based trade. So candle range low swept into key level in discount, expansion, retracement, expansion. You can take here for your partials, or you can offload fully here. So playing this out in time. Remember on our last class, I actually told you guys candle range highs and low can also be used as a key level for price. So let's see what actually happens. So here, the market did not actually retrace to this, but after expansion profile, we got a ranging profile and a manipulation downwards, then expansion higher. So looking at this, I actually see this being taken out with this move here, because silver actually retraced to that other block. I see this like this. Don't worry, we're going to talk about this on maybe other classes to come. So I see this as this, already retraced lower and sweeping this low, close above this range, target here. So going into the lower time frame, which is the 50-minute time frame. Sorry about that. You got your draw on liquidity, and here total soup, and also your high probability order block. And range manipulation, expansion higher. So moving higher, let me show you more examples. Playing this out in time, and the market dips into where? Into our discount region. Let's stop this here. So measuring this from the low to the high, measuring from this low to the high. This is actually your discount region in price. and the market swept this low with this move, and you got your candle range here, and this move downward is actually your manipulation profile here. Remember, I told you guys old lows can be used as key levels. So here, this is actually your manipulation profile, lower. Going down to the lower time frame, which is the 50-minute time frame, you can see how the candle closed below beautifully, and you can target your daily range high as your draw on liquidity, which was actually taken out with this move. Here, so here on the 4-hour time frame, or let me just say the 1-hour time frame. Here on the 1-hour time frame, this is actually a candle range, and this is actually a manipulation profile. So remember, I told you guys candle range high can be used as a key level. So here is your key level, and your turtle soup into key level. Going from the 4-hour time frame to the 5-minute time frame. Remember, time frame alignment. So this is actually a manipulation profile. We don't trade this. We trade the expansion profile. If you look to your left, all these are low resistance, liquidity, run. So this is your manipulation profile, and we have to position ourselves for longs on the expansion profile. So you can see how I'm actually integrating all these. So here, let me draw my discount and premium region, and you can see this is actually around the 0.5 equilibrium region of price. So that will be all for today.